Welcome back, ladies and gentlemen, for another jam-packed daily cryptocurrency market update. As always, we drop an update around about 1 p.m. UK time, or we try and make it around about 1 p.m. UK time. I know we are slightly later today, where we try and keep you guys up to date with the latest and greatest things happening within the crypto space, but also the broader markets. And that is exactly what we're going to be attempting to do in this video. So if you're not already a subscriber, do consider becoming one, and a like and a comment is always really appreciated. And as always, this is going to be a jam-packed one. So we are going to be starting off by looking and getting the kind of boring macro stuff out the way in regards to what took place on Friday with non-farm payroll. Obviously, the number was a miss. It's been a continued beat in regards to the expected numbers being beat by the actual jobs added to the economy. But we see a miss. We see a kind of slowing down. And of course, why is this relevant to crypto or anything? Well, because this is what's giving Jerome Powell the backbone to keep rates very high as a strong labor market. And also, it's kind of allowed him to do what he's done and allowed monetary policy to be restrictive, even though it's largely been null and void by what the Treasury is doing, because we are at the end of, and that doesn't mean it's going to end tomorrow, the fiat systems as we know it. They're snowballing, they're losing control. And ultimately, Bitcoin came around at the perfect time, but we've spoken about that quite a lot, so we're going to avoid that. But we're going to be starting the video off there. We'll be looking at the Dixie. Of course, Dixie is the kind of anti-risk assets. So when it goes up, typically the stock market, things like Bitcoin, gold don't do so well. We've shown that correlation previously. Dixie obviously coming off this week. Dixie and oil are very correlated. Remember, on top of kind of sideways inflation, we'll talk about inflation a little bit more. We'll look at natural gas and kind of where CPI and PCEs are at, because I have been very firm in coming out and saying I'm not in the second wave of inflation is here camp. In fact, I think inflation at worst is going to go sideways. At best is going to continue to come down. I'm not in this resurgence of inflation like what we've previously seen. I don't think it's going to go back up to 9 or anywhere near that. And actually, I think the markets have been suffering from a lot of uncertainty caused by inflation, caused by what are the Fed going to do? There's been a readjustment in regards to rates. We will cover all that at the start of the video. And then we're going to bring things into the cryptocurrency market. Grayscale seeing inflows for the first time to the tune of $63 million. We also have news that the largest e-commerce platform in Latin America now owns Bitcoin, because, of course, people are coming out of the woodworks now in regards to owning Bitcoin because they have to. Due to the fact that they hold, a lot of them are public companies, they hold Bitcoin on their balance sheet through the likes of BlackRock's ETFs. And then we're going to be talking about some massive news in regards to Vodafone. So Vodafone, one of the world's largest providers of SIM cards and sort of coverage. And they are looking to turn mobile device SIM cards into crypto wallets. The digitization of everything is here, ladies and gentlemen, and you need to be on that trend. This isn't I don't do technology. You can't say that anymore, because you are going to be left behind in the new world that we are fastly approaching. And I think there's going to be some real negatives to that new world. There are, of course, going to be positives. Am I maybe a little bit too pessimistic on the digitization of everything? I'm a nature lover. And I'm not just trying to appease a certain kind of people by saying that, but I very much take a lot of joy out of walking, cutting grass, fishing, these kind of things. And I think herding everything away from perhaps what is natural, and who am I to determine what is and isn't natural, into a kind of digital synthetic-esque world is a little bit dangerous. And then we'll finish things off on the Bitcoin chart. So we've got a lot to get into. I digress as always. Let's kick things off actually with an announcement. So before we actually dive into everything, I have actually started my 1 to 100k challenge with my Patreons. So this is where I'm taking £1,000, putting it into 5 altcoins that I think are going to do well in the right sector, that are small enough to actually kind of deliver those kind of returns. Remember, there's no guarantees. And if you want to take part in that, I will make it public eventually. Once we're up a couple of 100% on these coins, they'll still have a long way to go. Some of them were already, I only started it last week, up 40, 30, 50%. If you want to get on board with that, you can do that by becoming a Patreon. There's a link in the description. If you join for 1 month, of course, you'll unlock my portfolio, what I hold. You'll be able to see what I hold. You'll also be able to take part in the challenge or see what coins I'm betting on in the challenge. If you don't like it after a month, you can always cancel your membership. We don't lock people into anything, and we only want people in the group that want to be there. There is a limited number of spaces, so important for me to kind of announce that as quickly as possible. So Friday, we had non-farm payroll. Non-farm payroll expectations were 238,000. The previous one was 315,000. It was a massive beat. It beat expectations. And this one was one of the first, I believe, where actually non-farm employment changes has come out below what was expected. Now, this saw the dollar see a little bit of weakness. We've got gold on here. We're not going to do that. And the adversary of that is it saw Bitcoin see a little bit of strength because these are correlated. It's like a seesaw. One goes up, one goes down. Still on news here. Let's move it so you can see the full chart. So this is what we want. So I have a broader thesis on the dollar that I'm not going to go into. I think you're going to be coming down to the lower band of this channel that you've been in since 2008, when the Fed started adding to their balance sheet and the kind of game was officially up and rigged. And I think that's going to see the bull market take place. And I think that's on the failing of the kind of, or the very fast devaluation and proliferation of the fiat systems. Certainly the dollar, more so probably than anything, because there's more dollar debt out there than anything. They need more to service it. It is a great question that people raise is, well, because I'm about to come on to inflation, well, surely if this is going to happen, why aren't we going to see spikes in inflation? I think inflation is going to be elevated. I don't think it's going to spike in the same manner that it did. I think the majority of inflation is actually going to take place in assets. So this was good news, sort of. I mean, it's kind of like the double-edged sword here with everything, in the sense that this is reducing the probability, certainly of hikes, but actually increasing the probability of cuts. Because Jerome Powell will have to make a choice, in my opinion, between getting inflation to 2%, if it doesn't come down there naturally, and the economy. Because why? So when they up interest rates, markets typically go up with them, which sounds insane, but that's the historic correlation. And then there's a fallout afterwards. It's like a party and then a hangover, you know? We are still in that kind of everything's okay. Lots of people still haven't refinanced. The real pressure's on kind of the treasury, which they have an unlimited amount of money because, you know, they're the government. They work with the central bank. They can just print it. But there's kind of a lot going on. But generally what we want to see for markets, and remember, crypto is just a risk asset at this point. It moves with the NASDAQ QQQ3, 3x wisdom tree. NASDAQ, it moves more erratically than risk. Something like the NASDAQ, certainly it moves more erratically than something like the SPY. And we want to see risk do well. The dollar going up isn't going to support that. And the dollar coming down is going to be very tethered with interest rates. Again, why I think this is coming to the lower band of this channel, we're going to make this a real messy chart now, is because historically, and I'd have moved my line out of the way, when rates come down, the dollar goes with it, because rates are the very thing that prop the dollar up, and inflation is why rates have gone up. We'll come on to inflation in just a second. So I do think rates are going to come down. We're not in this second wave of inflation share camp. We're not in the rates are going to spike camp. We're in the actual soft landing camp, to be honest, because they can keep this scam alive for as long as they want to. And if you're not convinced that it is a scam, please do go and watch yesterday's video where we played that clip of one of Biden's head economists, or the Biden administration's head economists, actually talking about how money works. You know, it's hard to explain it without people kind of going, hang on, you know, what's going on here? So moving on to the week ahead, not a great deal. Lots happening in the UK, obviously Bank of England rate decision, UK GDP, UK construction PMIs. It's a UK bank holiday, but not a lot going on elsewhere. So markets may appreciate the non-news. And remember, the dollar has been strong. We'll go back to the dollar. We'll take my drawer off and we'll put oil on. Oil and the dollar, by the way, very, very correlated assets. And you can see how correlated they were with this uncertainty around inflation, which is affecting monetary policy and forward guidance on monetary policy, and thus bolstering the dollar, leaning on risk. We need to understand these mechanical levers of the markets. Everybody needs to, because it's integral to your life, and that's what we try and do here. So I think the dollar is going to roll. I'm not in the higher inflation camp. I think markets might appreciate the kind of lackluster from a news point of view week ahead. This is natural gas. So yeah, okay, oil really just gone sideways with the dollar. If you look at inflation more broadly, so we look at, this is CPI. it's not, the second wave isn't here. And what people are doing is going, okay, it's going sideways. It's forming a range. If it breaks to the upside, then we can start looking for that second wave inflation. If it breaks to the downside, we know we're on track for a good time. And Jerome Powell's already signaled, and I think that was my most important takeaway last Wednesday, was that he was going to start tapering off QT, which is going to help the markets. It's going to keep rates where they are. So the Treasury's still going to be spending at this absurd rate whilst he sort of tapers off QT. So there's a good time ahead of us, guys, is what I'm trying to say. And this is, of course, PCs, which is their preferred metric. This is still at 2.8. Again, this is still, in my opinion, a downtrend. We're not seeing that second wave of inflation. So we'll see how the markets open up. Bitcoin doing quite well. Again, some of our altcoins doing really well. Let's move on to a little bit of crypto news. And the first place I want to start is Grayscale have been the biggest dumpers through their fund of Bitcoin. Because when we took full advantage of the GBTC arbitrage, they had a trust that wasn't pegged to the price of Bitcoin, but it kind of loosely, or it didn't really track it. There was actual Bitcoin representing each share, and there was an arbitrage where you had a discount on the actual Bitcoin that the shares backed. People took advantage of that. When it was converted to an ETF, the prices kind of synced, and people were basically taking profits from that arbitrage trade. And then there's been a lot of outflows through the likes of Genesis, a lot of them in regards to bankruptcy filings and all this sort of stuff. However, we said there's good and bad news in that. The bad news is they're selling, and there's a lot of sell pressure coming from it. The good news is it's running out. We are seeing, and it's when you see headlines like record outflows on Bitcoin ETFs, everybody's instinct is to get bearish. You need to think a little bit more deeply about that. When do you get into a market? When it's at a low or a high? When things are looking bad or when they're looking good? You know, you want to be, the headlines about outflows, I do think we're going to see a lot of them come to an end. It's going to be interesting to see how the Hong Kong ETF, what the kind of journey that now goes on. Some other news is Latin America's biggest e-commerce platform, Mercado Libre, owns $29 million worth of Bitcoin, according to an SEC filing, coming out the woodworks. And this is huge news, by the way. And we're going to spend just a second talking about the kind of digitization of everything. This is what the future looks like. Vodafone's Pairpoint trying to turn mobile device SIM cards into crypto wallets. Vodafone will use SIM card technology to meet an anticipated surge in demand for cryptocurrencies on mobile phones. CPO of Pairpoint by Vodafone, David Palmer, spoke to Yahoo Finance Future Focus about how the company is advancing the use of blockchain on mobile devices to manage crypto transactions. Within each mobile phone is a SIM card, and we have focused on linking the mobile phone SIM card to digital wallets, identity, and blockchains using the cryptography we have in those SIM cards for the blockchain integration, Palmer told Yahoo Finance. Palmer outlined how the company's Pairpoint brand is advancing Web3 and Internet of Things (IoT) services by utilizing SIM card technology for blockchain-based digital wallets on mobile devices. Pairpoint provides a secure digital platform, so on and so forth. So this is what the future looks like. So you're not just going to have your crypto assets. Your identity is essentially going to be like an NFT that you can transport anywhere with you, and it's verified. We've interviewed people that are actually doing that, like Kilt Protocol, that are working with Deloitte. Everything's going to be digitized. We have always, and we continue to say this, and we're still on that journey, that blockchain distributed ledger is going to be the backbone. It's going to be a technology that's integral to everything. And people are going to be using it without even knowing they're using it. It's just going to seem normal, just like us jumping on the internet now seems normal. We don't really give too much thought in regards to, or using our phones. We don't think of the cell towers and all the kind of software and hardware behind it. So it's a very interesting world that we're moving towards. Big news from Vodafone, big jump, of course. And then let's round things up on the BTC price. We're just waiting to overcome this hurdle. Remember, we still got that higher target at 151,000. We've been so spot on with these targets thus far. The big one for me, and I continue to reiterate it, is total 2. So I would like for this to bottom, form that right shoulder, and then we're looking at a $3.7 trillion market cap. Just going to see altcoins generally do really well, and certainly if you're in the right sector, and I believe the right sector, and most, if not all of my 1 to 100k cryptocurrencies are in compute, data storage, and AI, because that for me is the real hot sector. On that note, ladies and gentlemen, I'm going to love and leave you. Have a smashing Sunday, and I look forward to seeing you all in the next one. Thanks a lot for watching. See you in the next.